Mrs. Vidyakini is a chartered accountant by profession. She's a fellow chartered accountant of Indian Institute of Chartered Accountants. She's been practicing since 30 years now, and her domain experience is in the taxation. She'll be talking about the topic, which is a topic which keeps coming up every year in our minds, about the old regime and the new regime. And every year we see the new regime is becoming more opted regime. Is there a relevance even today for the old regime? Is something she's going to discuss about. And with this, I thank you and request Mrs. Vidyakini to take the topic number 3. Over to you, Mrs. Vidyakini.
Thank you. Hello, everyone. Let us barge straight away into the topic. Presently, all assessees have 2 regimes which they can opt for. One is the old regime and the other is the new regime. The new regime was introduced 4 years back. Earlier to that, we had the old regime, and under the old regime, what the assessee would do is sum up all his income, and from the total income, reduce those deductions, those investments which would qualify for tax, and deduct that, arrive at the total taxable income, and this total taxable income would be taxed at the various slabs and the rates as mentioned in the Act. So these slabs were 2.5 lakhs to 5 lakhs at 5%, 5 lakhs to 10 lakhs at 20%, 10 lakhs and above at 30%. So the deductions usually claimed by the assessees used to be for the salaried people, either their HRA, their standard deduction, or for people who have income from house property, it would be interest on housing loan. And for others, it is basically the Chapter 6A deductions, which would be investment in insurance, or again, repayment of their housing loan, children education allowance, children education fees, medical insurance. These are some of them. So they would claim these deductions, arrive at the taxable income. And 4 years back, the new scheme was introduced, the new regime was introduced. In the new regime, most of these deductions were done away with. Only a couple of them were retained. Like, for example, in case of salaries, the standard deduction can be claimed. The leave encashment or gratuity can be claimed. When it comes to house property income, interest on let out property can be claimed. And overall, certain ATC deductions like contribution to the specified pension schemes, these were allowed to be claimed as a deduction. So end result would be your total income, total taxable income is higher than what it would be under the old tax regime. So does that mean you end up paying more taxes? No, not really, because earlier you had only 3 slabs, 3 to 5, 5 to 10 and 10 and above. But now under the new regime, you have more slabs at a lesser rate of tax. So under the new regime, the current tax rates are 5, 10, 15, 20, 25, and then 30. So only if you cross the 15 lakhs or taxable income, you end up paying 30%. Otherwise, you're much lesser. So end of it, most of the cases, the assessees pay lesser taxes under the new regime. So then if this is the case, which is better? Is the old scheme better or the new scheme better? I'm sure all of you would have this query. Well, it all depends on what are the investments that you have. Why do you want to make this investment at all? Depending on that, case-to-case basis, you can determine whether the old regime is better or the new regime is better. Why was the new regime introduced? There have been certain people, especially at the lower rung of the ladder, who have made investments just for tax saving purposes. They do not actually need those investments. Save on taxes, that is human mentality. So fine, we want to save on taxes, we make these investments. Whether we want or not, we are not really bothered about it. We see youngsters who've just started their career, who are just earning around the borderline. of the 5 lakhs or 10 lakhs lab, yet they go in for an insurance. Insurance is really not a tax saving measure. It is more to protect your family. But then this is not understood. We just go ahead, make an insurance. A person is living in a palatial bungalow in a villa, only child, yet he was in for another house. Why? Just so that he can get an interest on housing loan or a rebate. So these investments can be avoided. So what is the intent of the government? The government says the government does not want to get into the small issues of forcing an assessee to make tax saving instruments, tax saving investments. So what the government says is invest where you can get better return, make more money, pay more taxes. It's okay, there's no harm. If you've earned an income of 100 rupees, there's no harm in paying 20 or 30 rupees as your tax. Your wealth is increasing. So that is what the government is looking at. Don't invest in avenues just for the sake of saving on your taxes. So this is one of the reasons the new regime has been introduced. Now the next question, will the old regime be defunct? Will it be scrapped? Could be in a little time, not necessarily immediately. Over a period of time, it could get scrapped. Reason being, over the last 4 years, there's been a major shift from the assessees who have opted for the old scheme to the new scheme. A lot of people are opting for the new scheme. Because of the new scheme, you can see a lot of disposable income in the hands of the assessees. Earlier, whatever money you have, yes, first priority, invest in tax saving investments. So that is not there. You have an option, you have more money to invest in other sources which which will give you better returns. The returns can be taxed immediately. You can defer your tax payments to a future date. So these are the options available if you opt for the new scheme. Now, whatever I've spoken till now is all for the current financial year, that is 24-25. Now, the budget 2025 has come with a bumper. Okay, now the taxable limit, which does not have a tax to be paid, has been increased to 12 lakhs. So you're looking at 1 lakh per month. So a person earning 1 lakh per month, up to a lakh per month, doesn't have to pay any taxes. Similarly, earlier, up to 15 lakhs was less than 30%. More than 30 lakhs of more than 15 lakhs of taxable income, you would have to pay taxes at 30%. Now this limit has been increased to 24 lakhs, and that's a pretty big number. You're looking at 2 lakhs and above only being taxed at 30%, 2 lakhs per month. So looking at all this, there's a strong indication that the new scheme will be more popular. The old scheme could be gradually phased out. With the extra disposable income that you have, with people like Kini, First Assetz, and us to help you out in the investments and tax savings, you could be doing a lot of wealth, creating a lot of wealth. Think about it. Thank you.
Yeah. So with this, we have come to the topic, speech. We will now come to the question and answer session, Q&A session. We have very interesting questions that's come up from our participants. I'll just read these questions and regroup them. One of the question is the principal amount is eroded by 10% and the overall portfolio is 20. Peak. From down it is 20%. Looking at the current market condition, should we invest or not? Difference between long-term and short-term gain. I think Mrs. Vidyakini will discuss about this long-term and short-term capital gain difference. And what about switching hybrid and large cap funds? And what are the short-term and long-term investment opportunities? Yeah, again, we are coming back to the very important question of asset allocation. Whenever we have facing with volatility of this nature, 10% or 20%, we have two options. stay put and hang on to our original decision. That is how many years I have to remain invested. And the earlier slides have been the answer for you, because markets come down, but it will never stay down. So market keeps coming down, but it will never stay down. There is another thing which we can do is by way of looking at our portfolio and redistributing the assets. We call it as rebalancing. Rebalancing is as important an exercise as reviewing the portfolio. Currently, if you see, if I have lost a lot of my, if I say my allocation to equity out of 100%, I have kept 50% for large cap, 25 and 25 each for mid and small cap. Okay, let's imagine this situation. And my large and mid cap have eroded by 20%. And let us imagine, for a simple arithmetic purpose, the large cap has not eroded by any percentage. That means now my portfolio shows 60% large cap, 20 each mid and small cap. And therefore, if I'm keeping my static allocation of 50, 25, 25, I need to move 10% from large cap and move 5% each to mid and small cap, so that the contradiction in my portfolio will go away, because I am going to be staying invested in small, mid, and large cap, but I expect those investments to do well in future, but I will not reinvest in that fund, so in that segment. Therefore, rebalancing is a beautiful strategy which we can resort to under such situation. We can decide to change the allocation to large, mid, and small, or keep a static allocation which we kept at the beginning of the portfolio, and accordingly reorganize the investments by moving from large to mid and large to small. This is a vice versa. We can do that similarly. Or if we also have a fixed income portfolio, and fixed income portfolio generally does not get depreciated, there's a little money to be taken away from the fixed income portfolio and spread it to the assets which have now come down. Therefore, we remove the contradiction that for the investment what I've made, I've suffered loss. I'll continue with it, but I expect my investments to go up, but I will not make a fresh investment. So this is the contradiction, which keeps coming into our portfolios. And therefore, when the markets fall, though we have an allocation available, we don't invest. And nobody will be able to buy this market at lows, and will be able to exit this market at highs. So this is something which it's under nobody's control. Especially, you will have to take while you do the rebalancing, there is a need to rebalance, move your portfolio to a safety, or flight to safety. You'll have to do it only if you feel the economy is not doing well, and there are much larger problems that are ahead of our investments. Barring that, I don't think anybody should be worrying about the volatility that comes in, because that was the nature of investment which we undertook the journey. And this segment-wise a table will show you that the market will come down, but it will never stay down. So this is, I think, I'm covered 1, 2, 3 or 4 things. Yes. What about switching to hybrid or large? Yes, it's again, when at this point in time, your portfolio is having a mark-to-market loss. When you switch, you actually book the loss. Is there a need for you to book the loss is a question. If you book the loss becomes real, and then you move to the hybrid. In the hybrid, again, you will have a similar composition with a different proportion. You will again have a equity, and you'll have a debt. So therefore, you'll have to be very careful when you make the switches when the markets are down. Is there a need? Is there a capital loss which I'm going to harvest? Is that beneficial? All these other things will come in, and you'll have to take a decision around considering, the taxation, the real loss, and the opportunity in the next scheme. What happens, you exit from the schemes where you have made losses and move to a new scheme. There also you'll have a reinvestment risk. If suppose that investment does not do well, the new scheme, and the earlier schemes do well, you have missed out the opportunity. So there is a need for you to discuss and understand this whole process, and not to jump in and out of the investments. Hold on, fasten your seat belt, wait for the turbulence to disappear, or the equilibrium to surface, and then take the decision to invest or rebalance, because you have now understood that you have behaved in a typical way, some way, when the risk really surfaced. It is like this: we are all taken through a fire drill in the in our office space. All the large buildings make an effort to educate the inmates there, if there is a fire or a mishap, how they should come out safely. But these drills are taken place quite often at a regular interval. But still, when there is a fire, many a times, despite these drills, many people jump out of the window. They create a chaos, and there'll be a lot of stampede, and many people die, not because of the fire, but because of the stampede. So this is what happens when we react to the risk with a not much supporting logical details. And therefore, one has to settle down, wait for the turbulence to settle down, and then take the decision. Of course, moving from hybrid to large and all needs a lot of discussion. I think you do that with your advisor and take the necessary step. The short-term and long-term investment opportunity is, again, we'll have to go back to our portfolio allocation. The the investors who have surplus funds are, again, faced with this question: do I invest for short-term or long-term? If my asset allocation is high risk or low risk, and my period of investment is longer period or shorter period, yes, depending on that outline, we'll have to invest in short term or long term. The market will always give you an opportunity for people who have funds now. The markets have eroded 18-20%. Maybe this is an opportunity for someone to buy, and this may not be a good situation for a person who has come last year, but person who has come 2 years ago, for him it is still a comfortable portfolio. Only thing, he has lost out on the highest valuation, but his portfolio is still in a profitable, or the positive territory. So the short term and long term, again, we'll have to go back to our basics, go back to the asset allocation, go back to our fund flow requirement. If I don't need funds at all for a very, very long time, I have shown you in one of the graph that if I remain in a fund which is always safe, my whole portfolio has a risk of depreciation. So the short term, you have, the opportunities are quite low. It has to be in short, the funds like fixed income instruments and things like that, because in the high risk category, in the equities, you simply have no short term opportunities. Long-term opportunity, I would still say, you should stop topping up to the your respective asset allocation. Top up wherever your fixed asset allocations made. I think that should. We have some more questions on the Trump and Indian markets. We also have. Should we wait or invest? I have told you, the markets are there for you to buy every day if you're a long-term investor. Every day is a investment opportunity. Timing the market is very, very difficult. For example, in this week itself, if you have timed the market has been continuously falling. Previous week it was not so, correct. So over a longer period of time, these 1 or 2%, 3%, volatility over a 5, 6 year period of your investment horizon actually makes not much of a difference. It does not give you a significant return over a 5 to 6 years period of time. Maybe over a period of shorter period, in absolute terms, it might look very, very positive. But if you're a long-term investor, timing the market on a day-to-day basis will actually not give you any significant reward. Regarding the Trump and this thing, I think I've been reading many of the newspapers as well as in the social media. Trump himself does not know what he's going to do. So, for any of us to predict what he's going to do is very, very difficult. But I can tell you from my experience of how a political posturing happens. This got nothing to do uh, with the uh, with the way India and U.S. foreign trade is positioned. I'm just giving you a political um, opinion. Normally, when the new incumbent government is there, the leaders tend to make sweeping statements. It's very easy because you will have to motivate your supporters. And in India or anywhere in the world, you can see the political leaders make a lot of sweeping statements, and that's been happening even in US. But whether all those things, what he claims or what he speaks, will be implemented is a matter of execution. We'll have to see. There's a lot when I claim and I execute. There are systems and balances, checks and balances in every country. I think there will be these things will return to normalcy after normally 100 days, 3 to 4 months. All these political posturings, victory war cry, and all will subside, and then things will come to normal. The way the political leaders, especially a strong country like USA, they will always claim a lot of things and then come to the negotiation table a strong position. So Trump being Trump, businessman, he will always make big statements, make you feel very weak when you go to the negotiation table. These are negotiation techniques, but then the reality will strike after some time. Of course, there will be some damages, but it's very, very difficult at this point in time to predict what are those things going to be. It can also turn out to be extremely positive. We don't know because I know everybody say Trump himself doesn't know what he's going to do. Therefore, we leave it at that at this point in time. Of course, the market has reacted. Foreign currency has reacted. Dollar is appreciated, and there are temporary damages to our portfolios. That has to be agreed. But all these things will settle down, and the reality strikes. It has to surface soon. Um, any other questions around this? Uh, yeah, I think more or less I have covered these questions. There is a question which Mrs. Vidyakini has to attend on the short-term and long-term capital gain. Over to you, madam.
Yeah. Any asset, hello. Yeah, any asset which is held for a period of more than 2 years will be considered as a long-term asset, and less than 2 years is a short-term asset. But this is only for assets other than stocks and shares. For that, the period is 1 year. And there was another question about whether PF qualifies for new deduction under the new regime. No, PF cannot be claimed as a deduction under the new regime. Then there was a person who asked me about marginal relief. So if he's getting 12.76 lakhs, you will have to pay the entire amount. I think only up to 12.75 lakhs is where you get the marginal relief. Anything else? I don't see any other questions addressed to me. Yeah.
Wait.
Thank you.
Yeah, I think we have come to the end of all the questions are regrouped and answered. If there are more questions, you may send us the email. We have shared our email in this thing, info@firstassets.com, and we'll be able to reply to all your queries.
Thank you.
Thank you. Thank you all. It's wonderful, interacting with you, and hope this session was useful. You may also give us some feedback on every month. We would like to have this knowledge session. If you have any comments, you can give it to us so that the next month when we have a knowledge session, we will cover those topics. Thank you, and have a nice day and a nice weekend too.
Thanks to all.
Thanks, everyone.
Thank you. Thank you, sir.
Thank you so much.
Thanks, Prashant and James, for giving opportunity.
Thank you, sir. Thank you. Hope you found the session useful. Yeah, so we can end the session. Smita, you may
Sure.
take it over. Thank you.
Thank you so much, sir. Thanks everybody for joining in. If you have any further questions, we have shared our email ID. You can reach out to us. You can always reach out to sir for any further clarification, and also, of course, ma'am. Thank you so much. Have a great weekend. Thank you. Thank you for your time. Thank you so much. See you. Bye. Yeah, sir, we'll end the session and we'll see everybody in the next session. Thank you so much, sir. Yeah.
Thank you, Smita.
See you.
Yes, we'll exit.
Yes.
Yeah, thank you.